a very warm welcome to everybody. We're very happy to have you guys with us on the Zoom meet. I am one of the co-founders of the Stewart Group. I'm very proud to say we go back over 2 decades. We've got an asset management license in South Africa, number 748, which is one of the first. We've been on the Mauritian island for over 20 years, and we're licensed by the FSC there. So two regions. And over this period, we've had a period of 20 years. We've had great success, a very clean book. And as we all know that in finance, reputation is everything. And we're very proud of our reputation. The new addition to the group is Stewart's Investment Capital. Again, we've got a very special guy on our Zoom here, Bilal Adams, who I've known for over 5 years. And B and I have been very close. He's had a stellar career path, starting at Investec on the island, and then headhunted by Afro-Asia Bank, where he was CEO of wealth management. And we were talking one day, and with this digital asset space starting to really show its color a couple of years ago, I said, well, jump ship and join Stewart's Group and let's do this thing. Well, this thing is now in full cry. We, in terms of back testing and the strategies that we now have, whether it be arbitrage or spectrum, we go back nearly 4 or 5 years, with the one product being launched in November in South Africa 2019. And that's just gone from strength to strength, and been incredibly well received in the marketplace. So from being a traditional asset management company with traditional products, segregated portfolios, mutual funds, which we all still offer and have, we've now become one of the true leaders, if you like, in the digital asset space with our respective software strategies and managements that we have on display and offer. So incredibly proud, and without further ado, I'll offer you back to Bilal. Thanks, folks. Welcome.
Thanks, Glenn, for that warm welcome. So it's exciting to be part of the Stewart's Group now, and it's been a good almost 2 years of building the crypto strategies of the Stewart's Financial Services Group, which has been running for 20 odd years, as Glenn highlighted. We kicked off our adventure in crypto and digital assets with the concept of arbitrage. So we started off with the South African jurisdiction, and we kicked off a Rand arbitrage product, which has onboarded in excess of 400 clients, and it delivers now on average 7% return per week, compounding. So our initial investors over the last 2 years have done very well. We then realized that we could expand that Rand arbitrage opportunity into the dollar space, and then we built a dollar arbitrage product. The dollar arbitrage product does not include South Africa, but takes advantage of price inefficiencies in crypto markets, excluding South Africa. And the dollar product is generating a return of about 2.3% per month. Unfortunately, that product is quite full at the moment, and what we're doing is we are taking on investors in a slow onboarding process as we scale up, because we're a little bit oversubscribed at this point. And in running the Rand arbitrage and dollar arbitrage products, we've been talking to lots of asset managers, and what we found is that these asset managers are becoming increasingly more interested in crypto. And I can tell you my conversations with asset managers have changed over the last 2 or 3 years, from Bilal, you're crazy, why have you left a job running a big investment bank, a wealth manager, to go and start doing crypto and in a business that's in a market which is still growing. Those conversations have changed, and since Elon Musk, who's now a swear word, but let's say January he was the darling of the crypto world, and he did his first Tesla purchase of crypto. Those conversations changed, and big blue chip asset managers were asking me, how did I know that it was time to start looking at crypto. And let's say 2 or 3 months after that, those same guys are asking me, should I be buying or selling Dogecoin? And, is Solana going to be the next big DeFi because it's faster than Ethereum? And the knowledge in the institutional space is growing very, very fast. And the interest in full allocation to crypto risk is at its peak that we have seen since we started in crypto. Coming out of all of this, we then realized it was time for us to bring our crypto-centric strategy to the market. Now, our first Rand and dollar arbitrage strategies are very, very low-risk strategies. I'm sorry, I just have to keep allowing the people in, so I'm getting a bit distracted. But we don't have any market risk on actual crypto. The returns have always been positive on every trade that we've done in every reported period. And we use sophisticated software to manage that risk. And those are fiat into crypto into fiat trades. And those are your low risk strategies. Today, we're here to talk about our high risk strategy. Our high risk strategy, if you want, is the McLaren F1, and the other one is your Rolls-Royce Phantom. Right? So this is now the crazy, it's a roller coaster. We're telling you it's a roller coaster and it's on fire as well. Right? So it's a highly volatile product. You've seen over the last few weeks that it's tanked 50 odd %. Crypto markets have done so. And what we aim to do is we aim to dampen the volatility of the downside and enhance the returns on the upside. So I've got Graham with me, Graham Tennant, who is our portfolio manager of the Spectrum Great Reset portfolio. Graham's actually the brains trust behind the whole thing. And, he's one of the leaders on the investment committee and does a lot of the technical analysis supported by our RL software, which we have designed that gives us proprietary intel. So I'd like to then hand over to Graham to tell us a little bit about Spectrum, and we can talk about how we got into Spectrum and the market thesis that forms around this. I just want to contextualize that unlike other managers you may find or people trading crypto, we are not crypto traders. We are asset managers who have identified that a diversification out of equities, bonds, and your traditional assets into this new asset class will enhance your portfolio and are therefore saying that a small allocation into this new asset class is something that supports a wider portfolio. Graham, maybe I'll hand over to you to just put up the presentation.
Great, I'll pull up the presentation and share my screen.
Okay, I'm going to go on mute, Graham. Graham designed the logo as well. It's inspired by Pink Floyd.
Jack of all trades. Yeah, thanks, Bilal. Thanks for the introduction, and yeah, welcome to everybody. Great to see so many people around the table, or virtual table in this case. So yeah, let me kick off without any further ado. So Stewards Investment Capital Spectrum Great Reset Portfolio is the investment that we are obviously chatting about today. Let me start by just giving you a bit of a high-level overview of the main specs. So the investment focus here is to generate capital growth via active asset management in this new digital asset space. The reporting currencies in dollars. The minimum investment amount is $100,000. The official launch of this product is 1 July. So this is an early stage presentation. We are in essentially the seed raise period at the moment, where we are taking on a smaller minimum of $10,000, essentially for friends and family. But the hard launch is on 1 July.
And just to clarify on that one, when for the seed friends and family round, you're going to have to sign a special disclaimer to say that you understand all the risks, because the Mauritian regulator requires us to have a minimum $100,000 investment to be a sophisticated investor. But yeah, we'll get you to sign that form.
Sorry, Bilal and Graham, if I just may take this opportunity, guys. One thing, just for our US guys that are on the call, one thing I forgot to mention, within the group, we've obviously not just gone live with the US arbitrage fund. And with regards to the Spectrum version or second fund, that will be roughly 8 to 10 weeks away from the US launch. So just to avoid any confusion as Graham starts to continue. Thanks, everyone.
Exactly. So there's a Mauritian one, which is for all other geographies, and the US fund, which will be up within the next few weeks.
Great. Yeah, and then investment time horizon. So, like most equity type investments, this is obviously into crypto, but recommended is 5 years or more. Redemption notice period 30 days. As we discussed, the investment manager steers investment capital. The administrator or custodian will go into a little bit more detail as the presentation goes on, but that is International Assurance Limited, also based in Mauritius. The technology partner is Arel Technology, and the auditor is Ernst & Young. So I just want to kick off. Let me just give you the roadmap for this presentation. So the first thing I'd like to do is just place crypto as an asset class for investors in the correct context of where we think it fits in, and essentially the rationale behind making an investment into crypto. Then I'll take you through our investment process and the type of analysis that we do across the board, and then finally how we execute and implement our investment decisions in our management of the funds. So we've identified as an investment team, essentially the theme of the Great Reset. And this is not our language. This is the language of the World Economic Forum, which is a large bureaucratic organization. And they are essentially telling us about a change in the structure of the financial system. So they're talking about steering the market towards fairer outcomes, ensuring that investments advance shared goals, equality, sustainability. These are the type of narratives that they are communicating, and using technology to support public challenges and public health, etc. So that's the official narrative coming out. But I think if you look a little bit deeper into what to expect, we as investors are see some concerning aspects. So some of the things that we think that this Great Reset will involve is the rollout of universal basic income. So that, in our view, would lead to the proliferation of the welfare state, potentially higher taxation to support the green agenda and climate control, greater financial surveillance, capital controls, more creation of money, fiat money through quantitative easing and easy monetary policy, interference in the mechanism of free market dynamics, loss of purchasing power of a fiat currency, and ultimately the introduction of central bank digital currencies, which more and more is becoming or getting more headlines and creating a lot more attention around that. So these type of trends we see as being fairly significant headwinds for traditional asset classes and traditional investment strategies. So really what we're wanting to do here is say to investors, look, we want to manage funds in a way that can protect and grow your wealth, even in a reset type scenario, which we don't feel that traditional investments are really geared up to manage. So that's the Great Reset theme that we are putting a lot of emphasis on. And then just to paint the picture of the macroeconomic situation that we see, again, this will create the context for where we think crypto fits into this picture from an investment point of view. But the three main themes from a macroeconomic standpoint that we are focusing on is the central bank monetary policy. So it includes the expansion of the money supply and low interest rates. We've assessed that in turn funds what's been termed the everything bubble. So that's the asset price inflation and overvaluation of traditional assets. And then the coronavirus pandemic, which is obviously putting a lot of pressure on GDP and economic activity. So for us, this creates a very challenging environment for investors and essentially the ideal conditions for a Great Reset scenario. Okay, so let me just dive a little bit deeper into each one of these. And in putting this presentation together, it was really eye-opening, actually seeing some of these trends appearing firsthand. So this shows you the increase of the M2 money supply over time. On the left-hand side, it may not be too clear, but since 1960, this chart goes back, and you can see it's a one-way ticket to excessive growth in the money supply. If my investment portfolio looked like that, I'd be pretty happy. And we can see that there's even more significant uptick in recent months. So this graph on the right-hand side shows the annual increase of the money supply. And we can see that in the last quarter, or the last 12 months at least, there was a 25% increase in the money supply. Here we're talking about dollars. So,
and just to add in there, Graham, I mean, these graphs were done 3 months ago when we started preparing this thesis.
Yeah.
And since then, I think you would see this proliferation of monetary supply increased even further. So a lot of the inflation calls that we were looking at here a few months back, I think have become a lot more apparent.
100%. Yeah, so I mean, that's essentially an inflation of the money supply. Never mind what that's doing to your consumer goods prices, but as inflation on the money supply, that is a direct 25% decrease, in valuation if you just looked at the supply side of your dollars, which I think for any investor should raise some concern. So then the next question is, if we've got this new money supply entering the market, where is it being directed? So in my view, in our view as an investment committee, it can go 3 directions. So the first way place it can flow is into productive economic activity. And this is the ideal destination. And what we having a look at here in this chart is the growth of the money supply compared to the growth in gross domestic product, which is a measurement of economic activity. So here, if one new unit of money created 1 new unit of economic activity represented in gross domestic product, then that would be great, because there would be no new inflation, because the goods and services in the economy would match that of the money supply. But that's not the case, and that's why you can see that the money supply growth is outpacing gross domestic product. So it's clear that this is not the primary destination of this newly created money. The other place it can flow to is consumption. So if it was going directly into the wallet of the man in the street, they would have more money to go spend at the shop, and they would be buying motor cars and bread and milk and all those other things that people spend money on, and you would see consumer price inflation and your goods and services increase in value. And yes, we are seeing some of that, but we're definitely not in a hyperinflation scenario. So in our view, that's not the primary source, or rather the primary destination of where this new money is going. The third place it can flow to is financial assets. And for us, this is where the bulk of this money is actually finding a home. So across the board, if you look at different asset classes, stocks, property, bonds, you can see that we are in a very long-term bull market. And in our view, the primary driver of that is this proliferation of the fiat currency. So here we're picking on specifically the S&P 500. So on the left-hand side, these are just examples of valuation metrics. So we've got the Buffett indicator on the left-hand side. So that essentially takes the market cap of the S&P, divides it by the gross domestic product. And you can see that here we're really off the charts. Even the dot-com bubble in 2000, which is very widely recognized as a period of high valuations, we've surpassed that point as of fairly recently. And on the right-hand side is the P ratio. And again, we're only second now since 1950 to the dot-com bubble in 2000 in terms of a valuation metric. So it would be difficult to convince me that we're not in a period where traditional asset classes, and in this case, again, we're just focusing on US equities, but for me, it's quite clear that these assets are on the frothy side. And as investors, obviously, we're looking to buy low, sell high. This is not an attractive asset class as an investor, in my view. Okay, here's another way to look at it. So this is showing the correlation between periods of low interest rates and various bubbles that we've had in the stock market. So you can see on the left-hand side a period of relatively low interest rates preceded the dot-com bubble. Then you had low interest rates preceding the mortgage crisis, the housing bubble. And since recovering from then, we've had a multi-year period of interest rates close to zero. And yes, the Fed did try to raise interest rates after 2018, but that didn't last very long until the coronavirus pandemic came along, and interest rates are now close to zero again. And in our view, that has never, this trade or this scenario hasn't unwound. So you can see we've really had a one-way bull market since the housing market recovery. And in our view, this trend needs to unwind, and that's going to be very problematic, for investors. So in summary, this is where we see this new money flowing is into the bond market, equities, property, and it really is unprecedented if you look back in history at the length of time and the pure quantum of new money that's being created. In our view, this is unprecedented and could likely lead to an unprecedented financial crisis, unlike one that we've seen before. So the question is, even if you think that's unlikely, you need to try very hard to convince me that there is no risk in the monetary system at the moment. So at the very least, I think it's prudent for investors to be looking for assets that can hedge against that type of outcome. So to drill a little bit deeper into the two types of outcomes that we could expect that this resolves itself in, you get an inflationary outcome and a deflationary outcome. So let me just explain those briefly. So an inflationary outcome would be essentially a default on fiat. So that would lead to almost a hyperinflation scenario where investors and the market recognizes that these dollars and rands and euros that are being created are no longer a suitable store of value, for no other reason really that they've been created in excess supply. In that scenario, Bitcoin, which is limited in supply, has the potential to act as a safe haven asset and could perform very well in an inflationary scenario. On the other side, you've got a deflationary outcome. So that would lead to fears about economic growth. There would be fears in the market about the profitability of equities or bonds, for example, and that could lead to fear and sell-off in the asset markets. If Bitcoin has the potential to act as a safe haven asset, along with gold and silver and other traditional forms of safe haven assets. So in either scenario, our expectation is that Bitcoin and cryptocurrency in general has the potential to perform very well in either outcome.